please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Good day for NBFCs right from the beginning, and some of them like Indiabulls Housing Finance, M&M Finance, all of these stocks getting back to the highs of the day, though for the index it's been a little wobbly in the last couple of minutes. Sudeep Bandyopadhyay, Group Chairman of IndiTrade Capital, is with us on this leg of the show. Good afternoon, Sudeep. Thanks for joining in. So let me take that question to you. NBFCs, now that there's this bond party underway, what would you look at buying fresh, if anything at all?
Well, I think NBFC has been a great space, and I've been maintaining my view that in spite of rate movements one way or the other, NBFCs will be a great space to be in for the next 5 to 10 years. Very clearly, the PSU banks are losing market share, and the efficient private sector banks and predominantly the NBFCs, the efficient ones, are gaining market share. So eventually, over a period of 5-10 years, you will find that the NBFCs are capturing most of the retail, SME, MSME kind of lending, whereas the large banks will predominantly focus on wholesale, B2B kind of thing. So under the scenario, I think it's a great space to be in. Some amount of correction which happened gave an opportunity for us to buy. I maintain my bullish view. Bajaj Finance is a great buy. Shriram Transport Finance is a great buy. Even the southern NBFCs, Muthoot, Manappuram, current valuation, I am a buyer for 1 year plus time horizon.
Okay, just some more stocks. So Bondin Bank is ending with 25% gains. Of course, 56,000 crore market cap is what we have on Bondin today. So just been phenomenal the way that stock has rallied today. Easily your top traded stock, not just in terms of overall volume, but in terms of turnover as well. Over 4,000 crores of turnover in Bondin Bank. Sudeep, your thoughts on the kind of valuation that the Bondin Bank stock is getting?
Well, I think, Anuj, the valuation, I think people are talking about the valuation and why, it should not be at these levels, why it should correct. But look at this bank. I think it's unique, and we have to understand the difference between this bank and other banks, which are good banks also. Bondin Bank today net margin is about 10%, and they are confident of maintaining. And believe me, in the business segment they are in, I think 10% margin is maintainable. The way they have been expanding their microfinance book in spite of becoming a bank is commendable. And the biggest challenge for a microfinance company is cost of funds. They lend at around 25%, but their cost of fund is also 10-15%. Whereas post becoming a bank, Bondin Bank's cost of fund has come down significantly. That's the reason they are able to maintain the net interest margin, and we believe that this will continue. You look at the other parameters: return on assets, return on equity, return on assets being more than 4.5%, return on equity being 25% plus. I think the numbers are outstanding. So they deserve a valuation which is probably somewhere close to the valuation at which they came with the IPO. Yes, there is a little bit of euphoria post the listing. They are quoting at a premium to the list, the offer price, but in a long term, I think they will maintain and continue to attract a better valuation compared to many of the, supposedly peer banks.
Okay, fair enough. By the way, some more stocks on the move. EIL has had a bit of a sharp run in the last couple of minutes of trade. And then there's First Source. So obviously, technology continues to be a name that the market loves for now. So some sharp moves on a couple of these mid caps. Well, that's the market for you. Let's get some more opinion going. Lata caught up with William Boiter, chief economist at Citigroup, and began asking him for his advice to investors for the year where financial markets seem to be on a bumpy road. Take a look.
Financial markets do what financial markets do, right? They're all over the place. One moment they are unrealistically sort of optimistic and buoyant, and then like last week, we get a 6% decline, not just in response to increased fear following announcements of potential protectionist measures. So the key thing is, if you're in the real world, don't pay too much attention to the financial markets. They always overreact and they always get it wrong. But just do take the threat of trade wars seriously, and prepare for it. Be ready, should there be an unexpected interruption of imports or steep increase in import costs, be ready to adjust to that, to respond to that. And similarly, if the US should succeed in getting some of the concessions it seeks in China and indeed other emerging markets that typically are highly protectionist, right? And it were to get a boost to its exports, then I think businesses have to be ready to take advantage of that.
There is also this fear that Donald Trump is resisting appointing new judges at the World Trade Organization. Can that be a bigger source of conflict and a new source of trouble between countries and therefore spark more trade, trade tit for tat?
There is no doubt that even if we don't get trade wars, there will be a significant US-led retreat from multilateralism. So that applies to the US withdrawal from the Paris Agreement, to the threats made about NAFTA that probably won't materialize, but it still was pretty serious. And this now applies to the US continuing unwillingness to fill vacancies among the judges for conflict resolution on the World Trade Organization. That's a very serious matter. We are moving from a world of, if you want, US-led multilateralism to a world of much more aggressive bilateralism, where naked, unfiltered national interest plays a lot greater role than an attempt to serve the national interest through a wider multilateral approach. The multilateral approach has served us well for 60 years, but it seems to be getting increasingly close to being dead in the water.
Okay, that's a view from Citi. By the way, some of the NBFCs are really blazing away now, particularly the microfinance plays that are there in the market, as well as the housing finance plays. So take a look at GIC Housing. Last couple of minutes, very solid move, 8% on the upswing right now. Mars Financial, again, suddenly creeping on the screen, 6.5%. Maybe it's a bit of a rub-off of the bumper listing that Bondin has had today. But some of these stocks are really punching through. And beyond this entire universe, there's something like a JM Financials, for instance. It's anyway been very, very buoyant. Ashwini, if I could come back to you, you picked out, I think, ICICI Pru for the BTST. But given the way a lot of these other NBFCs are moving, is anything looking good for a long trade?
See, I would say that these NBFCs are now within 5% of their lows. A lot of them may have made their lows. Something like Bajaj Finance, Bajaj Finserv, I would say that they have probably bottomed out. Similarly, Diwan Housing, Capital First, they're all off 25-30%. So given that, I think this is a good time to get into all of these NBFC type stocks, and chances are that even if they don't make new highs, they will recover substantially from these lows.
So Ashwini, do we go through that period again where financials outperform the IT, at least in the near term?
In the near term, that could happen if we have an April rally. Then obviously financials is the space which will be back. PNB Housing is another one which seems to have bottomed out. So in case we have to get back to 10,500, 600, which appears to be a strong pivot, I think then financials probably need to participate a bit more. It does appear that IT is not planning to participate in this leg of the rally, and it will basically be financials.
Yeah, some very interesting moves in the last 15-20 minutes on a few of those stocks. Well, just about 2 minutes to go before the day closes out. So, Anuj, right now, how should we look at it? I mean, it's still looking good because we're not too far away from the highest levels of the day.
Oh, yeah, I mean, looking good, Surabhi. You can't deny that. Today's big point has been the mid-cap action. Listing of Bondin Bank, all these clearly has helped sentiment. But overall, been a good day for the bulls. At index level, there are not too many stocks which are really participating on the upside. Yes, I mean, IOC, HPCL, they have done well. Indiabulls Housing has done well. But in terms of bigger stocks, perhaps State Bank of India, which is up about close to, say, 3%, Axis up about 1%, Tata Steel up about 1%. but really, not too much of an impact as far as the big stocks are concerned. Bajaj Finance was up about 2%. That was a big move, of course. Maruti was up 1%. Lupin, 1% move is what we saw in a lot of these names like Kotak as well. Hindustan Unilever, ICICI about 0.5% gains. On the way down, the Bharti Twins, Airtel and Infratel both down about 2%. Bajaj Auto was down about 2%. Tata Motors down about 0.5%. And Infosys, Reliance, HDFC Bank, all of them down a bit, but let's just say that they didn't rally much, and that's why the Nifty's gains were capped, but no such problem for the broader market today.
Oh, absolutely. Big moves coming in on a couple of these stocks. I'm going to start with NBFCs because that pocket really became very exciting in the last 1 hour of trade. So let's get the names going. PNB Housing, when we're talking big gains on some of these stocks coming through, about a 10% up move on PNB Housing. Then, of course, there are others like GIC Housing, 5-6% up on that stock as well. You had a lot of buying on Mass Financial, on Satin Creditcare. So a couple of these, more of the MSME and microfinance related plays. So they were very, very excited as well. M&M Finance had a decent session today, about 2 to 3%. Last time I checked, okay, make that 4.5% towards the close now. And Bajaj Finserv, obviously, with the big inclusion on the index impending, so 2.5% up on that big stock coming through as well on Bajaj Finserv. Then there was some interest in the EPC side of the market, road contractors, EPC, infrastructure players, Simplex Infra, Punj Lloyd, even something like GIC projects. So between 3-4%. In fact, Punj was almost up 7-8% throughout the session. That was the kind of day that we had. Banks were all right. A lot of the PSU banks saw add-on buying. Let's get PNB up for you. PNB has managed about a 3% up move for itself. Nifty PSU Bank doing, of course, pretty well today. And there were others like Union Bank, Bank of India. IDBI Bank was a smart mover, 5-6% up on IDBI as we are closing out as well. Beyond this, more gainers. JSPL was a smart mover. Adani Power managed about 4% as well. And the odd stock NIIT that we were discussing, still up about 6-7% as the day was winding down. So pretty good on the long side or on the upside. On the losing side, Natco is something that stood out for me, 3.5% down. Oil India saw consistent selling despite the fact that obviously crude prices are still higher, but there was a lot of pressure for this stock coming through. Central Bank of India obviously has a mind of its own, so that did not participate with the PSU rally. And maybe at Talwalkars, there's a corporate action over there. They're demerging a part of their business. So that's why you saw a 20% cut on Talwalkars, because of that impending demerger that kind of got through today. But all in all, Anuj, as you were saying, not bad, because finally today, unlike yesterday, mid-caps participated.
Oh yes, today has been a day where the broader market participated. So advanced decline of 3:1, so it will be as good as you will see. I mean, and that's healthy advanced decline actually. 5:1, 6:1 normally is not. So 3:1 is quite good. Let's take final thoughts then, Midesh, for tomorrow. What are the key levels to watch then?
Yeah, so I think on the downside on the Nifty, we would maintain a level of around 10,120. So the buying zone would be around 10,150, 160. Today also I think we had a similar kind of recommendation. I think as long as 10,120 is not being broken, this choppy bounce back should continue and extend on the upside. And tomorrow could be more volatile given the fact that we have expiry. But overall, I do expect this time the Nifty to get past this 10,230 zone and head towards 300, 320 zone. And then we'll take it from there. Financials, I think, clearly are on the buying list. But that apart, couple of FMCG names. Nestle made a fresh high today. Britannia made a good move today, very close to its all-time high. So I think these two stocks are still showing signs that the uptrend could extend in these stocks. And I think these will possibly also be the leaders of the up move this time.
Okay. Sudeep, as we thank you, I mean, one corporate development that we are, of course, awaiting is this Fortis board meeting. We'll only get to know tomorrow if they've actually finalized on anything. The exchange notice didn't seem to suggest that, but your thoughts on the stock?
Well, I think, we all know as a business, it's a good business. There were certain corporate problems, and obviously that led to all this. Eventually, post the acquisition, which is being talked about, as and when the acquisition happened, I think it will propel, the acquirer into a pan-India player, and that's good. That's good for the investors. That's good for the acquiring company, and I think it's good for the healthcare sector as a whole. So the transaction is most welcome, and I think once the result is known, we all, should be happy as far as the market participants are concerned. We'll have a better stock to play with.
The board is going to be meeting in Mumbai tomorrow. Yash Jain is now joining in to tell us what they could be discussing. What's the agenda like, Yash?
Well, the last Sebi board meeting in financial year 2018 and market regulator Sebi will look to end the financial year by at least initiating discussions on some of the very crucial aspects. The most important aspect which is scheduled to be discussed in tomorrow's board meeting is the amendments and the discussions on the insolvency and bankruptcy vertical. Here we are given to understand that Sebi is likely to discuss a proposal to essentially bring a trading ban on companies which go under IBC. Also, there is a proposal which Sebi will discuss in terms of relaxing the minimum public shareholding of 25% for companies which go under IBC, and also letting the incoming or the new promoters to infuse more than 75% equity in these companies, essentially to ensure a more effective turnaround of these sick companies. Also, as far as delisting of these companies under IBC is concerned, Sebi could give some relaxation as far as the reverse book building norm of the delisting procedure is concerned. Apart from that, coming to the second point, Sebi will also discuss regulations with respect to non-compliance of listing norms. We are given to understand that Sebi might consider the proposal of giving exchanges more power in order to freeze the promoters' holding in companies which do not comply with the listing norms, which range from board composition to corporate governance and so on and so forth. Also, if this non-compliance continues, exchanges might also be given the power to start the process of delisting these companies. Also, there is a crucial proposal which will be discussed as far as the buyback procedure is concerned. We are given to understand that Sebi might fix a cap as far as the maximum quantity which could be offloaded in buyback offers. We understand that that could be fixed somewhere around 25%. Also, as far as buyback is concerned, Sebi could fix a time interval as far as 2 successive buybacks from the same company are concerned. Apart from these important proposals, we are also given to understand that Sebi might discuss the proposal of making co-location or algo trading more cheaper and accessible to the retail investors. This is essentially to get more parity between retail investors and the various large fund houses. Also, we are given to understand that Sebi might look to reduce the additional expenses on mutual funds which investors pay. Right now, this is 20 basis points of the total AUM of any particular scheme, but we are given to understand that Sebi might look to reduce this by as much as 15 basis points and bring this down to 5 basis points.
All right, Yash, thanks very much for that. Okay, those are the details, the data that everybody was looking out for. So as we had indicated earlier in the day itself, it seems that February collections on GST are around 85,200 crores. That's just a shade below the 86,000 crores that we saw in the previous month. So collections still continuing to clock in at slightly lower levels than perhaps what the government and, of course, economists would like to see that number at. The government's constant claim has been that it will get better once the e-way bills get underway starting from the 1st of April. And that's when there should be better compliance and therefore an improvement in the numbers. We have Timsi Jaipuria joining in with all the details. Timsi, so 85,200, slightly lower than the previous month?
Yes, as you mentioned, slightly lower than the previous 2 months. Previous 2 months we've seen collections above 86,000 odd crore rupees, and government is advocating what sources are saying that it was the month of February where already you are short of 3-4 days. Plus also businesses are not doing that well, and not to forget, as you mentioned, that plugging the loopholes is the mandate right now. A lot of loopholes are there which are leading to revenue shortfall. And let me remind you, Finance Minister had very clearly mentioned earlier last year with the first collection number that the comfort zone that the government feels in the collection terms is anything above 90,000 odd crore rupees. So in the initial 3 months, we saw that the collections were in the comfort zone, that too as high as 96,000 odd crore rupees. I beg your pardon, but after that, the numbers have started declining. So let's see, government officers now, they say that April onwards, tax buoyancy will come back. As you mentioned, e-way bill and other, like we reported yesterday, that a GOM has been set to look into the composition scheme taxpayers also, that whether there's a loophole there as well. So government is trying to plug the loopholes, and soon they will get on to enforcement measures also, leading to more tax compliance, which will help in increasing in the tax buoyancy.
All right, Timsi, thanks very much for that. That's the Feb number on GST. Assurances from the government, 2 railway PSUs that were slated to be listed will not go through that process at least as quickly. Sources tell CNBC TV18 that IRCTC as well as IRFC, their listings have been postponed due to valuation concerns. So this will have to be addressed before they can actually head to Primary Street. We have Ashpreet Sethi joining in with more details on the phone. Ashpreet, tell us, is it just valuation? Is it some other concern?
Well, it's absolutely, it's basically the valuation of the two companies which have been the biggest hurdles for the government. Now, remember, IRFC's IPO, or the listing, was also deferred earlier because they were seeking some clarification regarding taxation, which had come in from the Ministry of Corporate Affairs, where they had deferred the tax liability of about 6,000 odd crores. But however, they're seeking further clarification as to what happens after this exemption is lifted. So we'll have to wait on that front, because what we pick up from sources is that the Corporate Affairs Ministry will be coming out with a new notification regarding IRFC. But as far as IRCTC is concerned, the main issue is that, remember, through an order, the service charge that they used to collect through e-ticketing, that had been discontinued, which has adversely affected revenue IRCTC was making from that. So that has also affected the whole valuation process. So we'll have to wait and see. But yes, the government has failed to go ahead and list the two rail PSUs. They were saying in several statements for the past few months that they will be able to do by March 31st. Back to you.
Chat commodities, and let's take a look at the crude oil prices to start with. And yet another day of gains. Today actually is the third straight day that we are holding above $70 per barrel. On your screens, as you can see, another 0.5% of a surge is what we are trading with. It's an 8-week highs, and the going has been quite good. But it's not just the crude oil prices, because when you look at the other asset classes, or rather other sectors, they are doing equally well. Today actually has been a very strong day for the industrial metals as a sector too. We started Shanghai with nearly 2% gains with steel and iron ore, and that of course had a spillover effect, and we did see all the industrial metals gain on the higher side. But the focus clearly is on the crude oil prices, where we are looking at geopolitical concerns. There have been various statements from Saudi Arabia, Iran, etc. And of course, it has to do with the fact that we are looking at OPEC perhaps continuing with output cuts into 2019. That is taking the crude prices higher. Amrita Sen, Chief Oil Analyst at Energy Aspects, now joins us on the line from London to talk more about that. Amrita, hi, good to have you. $70 on crude, third straight day. How sustainable is that though?
I think, look, we've been probably one of the most bullish on the street, and we've been expecting 70 to 75, but it's in the second half of the year, not as soon as it has happened. The fundamentals are very strong, but seasonally this should be the weakest time for crude oil because refineries are going into maintenance. So as you said earlier as well, there's a lot of geopolitical kind of flare-ups that are supporting oil prices right now, be it Trump and the considerations around Iran, and Venezuelan production continues to fall. So on that basis, I do think prices will be high. Can we get another small pullback just because of seasonality? Yes, it's very possible in the coming month or so. But I think the most critical thing is that this time last year, or the last 3 years, we had a very big inventory overhang. Now, there is no overhang left anymore. We are in a balanced market. So any draw that you see from here will tighten the market, and therefore the market will price in geopolitical risk very differently today from what it has done in the last 3 years.
Amrita, I just want to get back on the numbers that you mentioned. So you are looking at $75 per barrel kind of levels in the second half of this year. Is that the highest that you expect, or are we looking at towards 80 for Brent? What numbers are you guys working with on a quarter-on-quarter basis now?
So we are, these are some forecasts we've had for 2 years now. We've always expected prices to average about 75 in Q4, which does allow prices to hit $80. And it is very much based on the expectation of decline rates outside of the U.S. And you are seeing that right now. Brazil, Mexico, Venezuela, Angola, OPEC and non-OPEC, every single country is coming in weaker. And yes, the U.S. is growing, but if the others aren't growing at all, in fact, they're declining, the U.S. has to fill in a lot of that gap. And on top of that, demand is very, very strong. So in the first half of the year, we were still expecting prices to be below $70, so between 65 and 70. Okay. But of course, prices have risen more. But still, in terms of the upside, I don't expect it to be much more than 75, 80.
Okay. And is that how you would see the year ending as well? Because most people are putting their most bullish bets on for Q3. That is when you will see the summer seasonal demand, the northern, the hurricane season come in as well. So would you say that that is the time perhaps that we would see most bullish when it comes to prices?
Yes, absolutely. I mean, look, summer Q3 is always a strong quarter, but I also believe that the strength can persist into Q4 simply because as we draw more and more inventories, the deficit will be even larger in Q4, right? And unless and until we think Venezuela or Iran could turn around, I mean, Iran is still a risk. It's not that it's happened, but Venezuela is a real issue in the market right now. Again, a lot of Indian refiners buy Venezuelan crude, so I know it's a big headache for them as well. I mean, Venezuelan production is dropping precipitously right now, and that is something the market has to figure out how to offset.
Sure. Amrita, I also want to look at the demand side of it because, while of course China continues to import very high, it is the Indian demand which is picking up as well. And there are some reports doing rounds on how the diesel demand for India could hit a record high for 2018. Of course, there is infrastructure, there is elections coming in. The demand, of course, has been growing. What is your sense when it comes to the demand point, especially in India and more specifically in the Indian markets this year?
We have probably been more bullish than most on demand this year is because of India. I've been of a strong belief that the Indian demand will be extremely strong this year ahead of the elections, and various state elections and government elections next year, as in the national elections next year. We do expect Indian diesel demand to be at a record high this year, and also we expect record growth this year of about 140,000 barrels per day year on year. We are already seeing phenomenal infrastructure spending undertaken by the government. The budget has called for record investment in railroads and just infrastructure generally. So that is going to be very, very positive diesel. So for us, I know the stories you're talking about today, there has been quite a few, including from the government, but this just confirms our view, which we've held for a while, and I do think diesel will perform very, very well.
Point taken, Amrita. We'll let you go at that. Thank you so much for joining us and giving us your sense on supply, demand, and of course, prices going forward. Tapan Patel of LKP Securities joins us now as well. Tapan, what is your sense for the crude oil prices for the Indian markets? How much further higher can we go?
Hi, Manisha. Good afternoon. Yes, as you discussed, the supply side factors are playing the important role here in the current crude rally, and prices are very well sustained above $65. So we can expect $68 and $70 in near term, and for the longer term, we can expect $74, $75 in WTI. So, as you said, the OPEC is the main crucial factor for the price, and if we decided to extend the output cut, then we can see some more buying coming in. Also, the tighter inventory levels from US side also, and the geopolitical tension between Saudi Arabia and Iran are also supporting factors for the current rally. So, I think 4240 is a good level to go long in crude oil, with the stop loss below 4210, and upside target can be near 4310 in the near term.
Commodities seems to be getting its flavor back, Tapan, and we are looking at very bullish reports coming in for gold as well now, especially as we hold around those 2-month highs. How are you looking at the prices for the near term and a slightly longer term perspective as well?
Yes, if we talk about gold, and prices are currently trading near resistance level of 1355. So if it crosses that, then we can expect 1370 and 1420 levels over the longer term. So I think buying in this is a good strategy for the longer term, and for short term we can expect buying around 30,700. But for near term, for the current for today or tomorrow, we can expect some selling pressure because of the recovery in dollar and expectation of easing tension between US and China over the trade war. So we can expect that correction towards 750 in the near term.
Point taken, Tapan. We'll let you go at that. Thank you so much for coming by and giving us your strategies on all those commodities. With that, it's a wrap up on this edition of Closing Bell. But